Hey everybody, today we are doing Zoom video communications. I believe that is the full company name, but I forget. I'll see it in 20 seconds though. But anyway, getting into it, earnings come out on Monday. This video will be out tomorrow, which is Saturday. So getting it done early, hopefully it does well. I think a lot of people are expecting it to do well. I think it was up 7% today. So that's really solid. So we're going to get into it. Full analysis. A lot of people have talked about price points and valuations. Now, I am perfectly comfortable and fine with giving my own personal opinion on like where I think a stock is headed. Like, for example, Cerence the other day exploded, including or yesterday exploded, and today too, and the price went to like $7. And someone was asking me, "Do you think it'll start going down?" And I told them like I think the fair price is between, I think I said 6 to 8 or 5 to 8 at the moment. So pretty big gap there, but I feel comfortable doing that. But one thing to remember is, again, I am not an investment advisor, financial advisor. I All of this is for entertainment. Do your own research. I'm just providing some entertainment and some information on some stocks that I like. So, Zoom, let's get into it. Make sure to subscribe. All right, so as you can see from right here, next report date 25th of November, so coming up soon. One thing I will start doing is mentioning the market cap of the companies I review. So like for example, Zoom has a $26 billion market cap. That is kind of an important thing to know, and I realize I don't say that very often. So I will start actually mentioning that. I mean, obviously you could see all the statistics yourself, but just to expressly mention, I know these, especially if you're on your phone, it's probably pretty hard to read. So anyway, let's just get right into the financials. Cost of capital looks good. Target price is actually fairly well below at 76. Now, to be fair, they were up a lot today. I'm assuming in some hype, some anticipation for the earnings. Long-term growth rate actually is lower than I would expect it to be, but I'm just gonna give the credit there because who knows what's going on with that. So let's head into the financials, see how everything is doing here. So sales for them look really, really good. Obviously, with COVID and everything, Zoom exploded. And let me just zoom out really quick here, give you a bit of a better view. So looks really good with sales. Operating income is a little shakier, but it looks like they've been bringing it back over the past 2 years. Net income, again, same thing. EPS looks pretty solid. And total shares looks like it is right around same amount. A little bit of dilution. Nothing too crazy there. Overall, 300 to 309, that was a bit of a jump. I mean, other than that, it was, well, no, honestly, they are diluting a decent amount, which isn't the greatest thing, but not the worst thing either, considering how much their sales were growing. So cash, they have some of the least debt I have ever seen in the long time that I've been looking at stocks. That is absolutely insane. Their assets are crazy growth, I should say. Again, short-term and long-term debt is nothing. I I don't even know why they would have any at this point. It seems like you could just get rid of it all. Retained earnings are looking really good. Obviously, that net income recently going in more and more positive. That is fantastic. So overall, so far, really good for Zoom. I don't want to say unexpected, but looks a lot better than I was expecting. Operating cash flows looks really good. All funds from operations. Purchasing a ton of investments. Again, the change in capital stock is a little shaky, although it did say they were diluting also, but then we see negative change in capital stock. So that is also something to be interested in, but no big deal there. I'm going to do the 0.5 because every single other part of their situation just looks so good. Free cash flow again is really solid. And then let's get into the use of cash. Should be solid. So there is a little bit of the share repurchase there that we saw. Debt issuance obviously is nothing. And then repurchasing of stock. So it looks like they did a fairly large repurchase last year. And other than that, they've been semi-consistently issuing, which isn't terrible. I think I'm going to do the 0.5 again for that, only because we've only seen one stock repurchase and none in 2024 so far. So we really don't know if it's like a one-time thing that they did or if it's going to continue. So we'll just have to watch out for that in the future. So gross margin looks okay. SGA to sales is slightly below its average right now, which is good. That's usually what I look for. Obviously, 57% is very high, if I'm being honest. That's very high. Net margin is a little bit below average. Looks like they took a big hit to their net margin 23, which we did see earlier with the lower net sales. I'm going to do the 0.5 because it's below its average. And then ROA, ROE are both also below average, which does kind of make sense when you consider that in 2021 they had so much growth that it's kind of hard to keep up with that. But even still, being below the average is not something we want to see, but still is okay. And then debt to equity obviously is nothing. So nice to see that there. So overall for Zoom, we got 19 out of 23, 81%. Pretty solid score for them. I honestly kind of expected it just because when you're a fully online company like that, you really don't have too much expenses. Obviously, their SG&A was a little high at 57%, but other than that, there's really not much to go through. So anyway, let's move on to their earnings and see how that is looking. So obviously, their earnings come out Monday, but I can go to the last one and look at how they did on their last one just to see some things that we can expect. So overall, looks like they did fairly well. Online customers beat, enterprise customers beat. Operating margin was high. Operations cash was high. Free cash flow. So overall, everything is pretty solid. Now, one thing, enterprise count. I'm not sure what enterprise count means, but I'm assuming it is maybe number of customers or businesses using Zoom, down 12%, which is not great. One thing to say though, customers contributing more than 100K in revenue grew 7% year over year. So that definitely would cancel that out. Again, I'm not exactly sure what enterprise count means, but I'm sure it's not the worst thing in the world for it to be down 12%. But again, customers contributing more than 100,000 is up 7%. That's awesome. And then net dollar expansion rate, 98%. I'm sure that's a good metric as well, but I'm not sure what TTM means. But overall, this is pretty good. In the financial areas, they beat. Let's go into the street takeaways here. You could read through this if you want to. Again, if you want to pause here and read through these, you can. One thing I will just point out is obviously decent results overall. Solid Q2 results, better than expected enterprise. So overall, very positive earnings report. Now let's go into the preview of the earnings coming up on Monday. So got a lot of stuff to get through here. I'm probably not going to go through every single thing, but expecting some guidance for 2025. Make sure that when the earnings do come out, if you're able to look into it, look in and see if they adjust these numbers, lower them, raise them. Price history for quarter three, you can see how they perform usually, which is kind of interesting. Options are implying a 9% move, which is kind of huge, but it also moved 7% today already, I think. So that is definitely something. Looking like they're going to basically be in line with their revenue estimates. Again, you could read through all these financials if you want to. I'm not going to go through everything, but this is what their estimates are looking like. And I believe that is it for that. So one thing we're going to do is go away from SolarEdge's chart here and look at Zoom. So you can see again, oh, sorry, not 7%, 5.7% today. And their chart is had a lot of pain. Obviously, you could see where they were extremely hyped in 2020 with COVID and everything, dropped down a lot. Now, again, they have seen some crazy growth. I really wish I would have looked into it a couple months ago, but now may be the next best bet considering the earnings are going to be out. Price target of 78 per share. So apparently they're still considered relatively overvalued, which in my opinion at least is kind of wild considering how far down they've came, but that could also just be a note of how overvalued they were from COVID. So now they're more towards a fair market value, which is good. I mean, if they're at $26 billion here, imagine what they were at almost $600 a share. Way overvalued, does not need to be there. Again, sorry for zooming in and out so much, but I just like to show the entire scope. But anyway, expectations for the movement are something along these lines. If I could get it to line up a little bit, we will see. But essentially just moving somewhere within this guiding area, maybe a move towards the low 90s, possibly if positive. If not, and it breaks through like the upper 70 areas, we could see some mid short-term pain, but we'll just have to see. So I may do an update video after earnings. I might turn it into a short. I am trying to get into shorts recently, but we'll see. Anyway, I think that's it for Zoom. Hope you enjoyed. Hope you got something. Hope you learned. Make sure to subscribe, and I will see you next time.